What is up, my people? It's your boy Nick, HOUTX Trader from Houston, Texas. Guys, today we're going to look at 30. We're going to look at Nasty Nas, and we're going to look at Goldie, and we're going to evaluate them and see what's going on. The Feds came out with their interest rate decision, and we're going to look at how the markets reacted to that decision. And if you watch this video right up here, one of those, we're going to you'll see on Sunday that I had called what's going on. Not that I'm trying to be fucking Nostradamus or nothing, but if you have some sort of fundamental understanding of what's going on in the market, then you can use that to your advantage. And we combine that fundamental with the technicals and the Fibonacci's that I show you guys. And then, hey, you might just have a strategy. So let's share the screen real quick. First of all, give it up to my flash funding, who's going to allow me to give away three $10,000 funded accounts tomorrow, which will be May the 2nd, Thursday. I'll be giving away a free $10,000 funded account. So please check back with this tomorrow. I'll be live trading around 0700 Central Standard Time. That's 800 out east. Come back in and check us out. Check me out, not us. There's only really me. Okay, guys. Anyways, on the daily, 30-30. We always start with the dirty 30s. As you can see, we'll take this way. Price came up, price came down, and look at this wickety wick. Okay, remember this wickety wick. Okay, this wickety wick. I wish I could. Well, I can't delete it. I'll just delete. All right, we'll restart the Fibies. Look at this wickety wick. All right, this wick is right in our buy zone. I told you guys, and everyone knows. I don't. Maybe not everybody, but Dirty 30 loves the 88.6. And look at that clean rejection below and rejection actually above the 78.6. Guys, if you see that, that's a sign to buy. All right. It rejected that fib zone clean as day and closed above the 78.6. That's a buy all day long, gentlemen and ladies and gentlemen. Let's go to the 4 hour. Okay. So now here's what we're looking at now. We knew that the Fed's interest rate decision was coming out today, and we said on Sunday that Monday, Tuesday was probably going to be a trickle down situation, right? Here's Monday. Excuse me, that's April 24th. Monday, 29th, right here. Yeah, so here's Monday, and it sank all the way down until Wednesday, and then we had a push up. And so we said on Sunday that the market is probably going to continue what it was doing, which is this sell there and this sell there, and get us to a point on Wednesday where we could buy. Okay. And that's exactly what it did. So come Wednesday, today, we're waiting for the Fed's decision to come out, and it was at the double bottom. At the overall, the bigger Fibonacci's, we can see it held our 78.6. And then really, if you wanted to do this fib, because this is the buy fib we're working in. So what we do then is we mark off the low, we mark off the high, and so this is the fib we're working in. Okay, this is the overall fib. So we're looking at this 61.8, which is the magical fib number, and it rejected. So I don't think this is done. I still think that this. Well, let me rephrase that. Yeah, I was gonna say maybe it needs to come back down here one more time and check this area, but it's already cleared that out. So maybe we can get one more push down and then pop off. So if I was you guys, and perhaps what I will do is put in a buy limit at this 88.6. Your stop loss would then be this guy right there. Your buy limit would be at the 88.6. You have a pretty small stop loss at the 10%, as we always do. And then your target is going to be up here, at least at the 236 extension and the 78.6 on the sell side, which would also be filling in this fair value gap. Okay. So let's just delete this and clean this up, and let's look at why. Okay. Let's look at why. So we see here on the internal structure that this fib, again, this fib from here has not been retraced. So from the top up here, we still have this fair value gap in this area there that has not been retraced. So this is the fib that we're working in, because this would be the swing here, and this is obviously the swing bottom. So on the sell side, we're still working inside of this fib. All right. So what we're going to do then is we're going to take this Fibonacci from here. We're going to draw it top to bottom. All right. Let's adjust this sell zone, because that's no longer the right spot. Here it is. This is the right spot right there. Extend this out. Now we can, well, when we do go to sells, we'll be selling in this area, and then our stop loss is always 10%. Okay. Stop loss is 10%. 10% of the fib. Okay. So that let's delete this fib. We have the game plan. There's our sell zone. Now let's think about why this makes sense. Okay. We have the fair value gap, right? We have uh the local momentum is obviously in sells. Excuse me for that. The local momentum is obviously in sells. So we're looking for a healthy retracement off of this swing marker right there, right? To come back down and to continue the sell off. All right. Now, if we delete all this and we come in and we look a little bit lower, look at this. Look at this liquidity that we've marked off top here. And we also have this liquidity here. So we have this top, we have this top, and we have this top. We have all this liquidity sitting in this area. So why doesn't the market just want to come up, get into our sell zone, hit this 88.6, which is damn near this extension of the 236 here. Maybe it hits that 236 and then the candle closes below. And then we start to sell off. Okay. And then we start. So that's our play. So if this market wants to come up and push up over the next 24 hours, okay, even in tomorrow, this is Wednesday night. So let's say tomorrow this market wants to push up. Guess what we're doing? We're going to sell. Okay, because it's going to target all this liquidity that I just showed you. If it doesn't do that, that's plan A. What would plan B then? If the market from here, from this 382 or this 236 area, and that's probably what it's going to do. If we look at the Elliott wave, that's exactly what it's going to do. Now that I think about it, 1, 2, retracement, 3, okay, right to our 78, 88.6 area, somewhere in here. And then it's going to push off and then come up here and take this liquidity to the 236. And then I don't know what it's going to do after that. So let's not even think about that far ahead. So this is more like a plan A. So our plan A then is going to be a buy right down here and let this liquidity get taken out. Plan A, right? Let this liquidity get taken out. Plan B then is to sell up here. If for some reason this just gets bullish out of nowhere tonight and gets up into this area during Asia and London, then we'll sell and go the opposite direction and continue the trend. So basically, I think it's going to sell from up here, but we need to either buy it until we get there, or if we miss that trade, we miss that opportunity, then we just need to go ahead and wait for it to get there, in which case we'll sell it. All right. There's plan A. There's plan B on the dirty 30. Let's just also, but while we're here, put a little extra sauce on this. Let's look at this sell side fib. Okay. The sell side fib, look at this. You can't make this shit up, dude. This happens so much. Look at the 78.6 here matches up with the 236 there. Okay, guys. This is why these fibs match. All these rhythmics and these harmonics are lining up in the same zone. Okay. But you guys know that's the first leg. If you ever watch my videos, I like the second leg. So let's just drag this little Fibos over here. Top to this little bottom right there. And look, lo and behold, the 236 lines up with the 786 again. So I'm just going to go ahead and redraw this fib. There to there. I mean, look at that. Those 236s, those Fibonacci extensions literally line up. I mean, look at that. All three of them right there. So perhaps instead of taking an entry there, we look to take entries here. All right, a little bit bigger of a stop loss. But again, it's not a whole hell of a lot of pips. So it doesn't really matter that we're taking it that much earlier. So we're still good. So there's our plan A. Let's look for buys on the 37,523 area. And then, yeah, we TP1 at the, we TP1 right here, which is the bottom. Also, guys, look, this is the bottom of the fair value gap, but it's also this support resistance area. All right, so we'll just take our profit there, and let's just call it 38,700 flat. 38,700 flat, right around there. Okay, plan A, plan B, that's dirty 30. Let's look at nasty NASDAQ. So NASDAQ, as you can see, is quite a bit different than what US 30 looks like. But again, on the higher time frames, and this is what I was showing the Pip Connect guys earlier, if you get good at learning how to draw your fibs. I call them fibos. I do not have an English accent. But if I did, that's how I would say Fibonacci's. Fibos. Okay, look at how this, and I have these boxes lined up here. Look at how this 236 area is support, and look at all the support right there. Look how it's resistance here and how it's resistance there. Same thing for the 38 too. Okay, you see how it all reacts? Look at the 50. You see how it reacts right there. Look at this wick here, support here, doji. All right, 618. Look at the rejection. Look at the rejection. This is breaker block right there, breaker block. All right, so the 618 has, so you know that your fib is good at this top. Obviously, it's the top, right? Like the top is, everyone knows where the top is. It's undisputable. What you don't know is where the bottom is. So this is how I do this. And this is what the book says on Fibonacci's. If you were to, let's just delete all these rectangles. Let's say you don't know where your fib is at. And you're like, well, shit, where should I draw it? Well, we know where the top is. So just start at the top. When we start dragging here, does that fib look correct? What about this one right here? What do we go to this bottom? I mean, that doesn't look too bad, right? But look how this low broke that fib. And so I kind of want to find, where is the market going to turn around? See how this low broke this low? So that's not the right fib, right? It's not the right one. So we keep dragging. Well, how does this one look? That's not too bad. What about this one? Yeah, I think I kind of like this one better. And this is my whole, this is what I do. And this is how I do this. This 236 has a lot more rejections. This 38.2 is, I mean, that's close. It's got one there. The 61.8, the 78.6. So yeah, I kind of like this fib right here. So this is where I would draw my fib. So I like the 88.6 for entries, right? So if we're gonna use this Fibonacci as our buy zone, well, technically it already hit the 78.6 and rejected. So we might not get an 886. Right? We might not get that. But let's look at this. This fib on the sell side. Hmm. Yeah, man, I don't know if we're gonna get it. So luckily for me, I'm already in buys, but I'm in buys over here. This is also on the daily. So just know that on the daily, we've already had we've already had the 78.6, and look at the strong break of structure on that. All right. So this then, let me get the right line. This then, well, you could have done one of these. All right. You see, or even to like this tip if you wanted. All right. It broke structure there. And then also you have this high, and that engulfing candle right there broke that structure. So if this was a structure, you could have called this maybe a change of character here. That was a break of structure, and it broke the trend line there. So we have a break of structure to the buy side. So I don't think that this market, at least right now, is going to come all the way back down here and hit this 88.6. I think that boat has already left. What we are doing though is forming a Elliott wave correction. One, two. So we bought on this third, which I do. I have an entry down here. We need to take this up to the TP, and then we need to look for the turnaround spot up here to then maybe come back down. Okay. And we don't know if that's going to happen. This could continue to go bullish for the next month or two. So what we need to do then is look at the sell Fibonacci, right? Where are the sellers at? Where are the sellers at? All right. Well, the sellers are going to be in this 78, 88.6 zone right here. All right. So then let's delete this buy fib, which is right here. Okay, let's get rid of that. And so once you guys know, look guys, once you see on the higher time frame the 78.6 got rejected and it broke structure, then pull out the Fibonacci tool and find your entry. There's the new Fibonacci. Let me just delete this one so we can keep it clear for understanding, right? Bottom, top. Look, 78.6 entry. Guys, it works. Look at the RSI oversold. This works all the time. If you guys just get good at drawing your Fibonacci's, sticking to entries at the 78, 88.6 inch area, and waiting for the RSI to be oversold, like Jesus, it just works. I mean, look at this 78.6 on the daily. Look at the RSI. Yellow, oversold. Enter the trade. Enter the trade, right? Like, I don't know how many hundreds of times I make these videos and show you guys this over and over and over again, but FNA, what does he say? FNA cotton, right? A little dodgeball reference for you guys out there. So yeah, I'm in the trade. I'm in down here. So I'm holding it, and I'm holding it to up here, and then I'll tap out with it with my runner, and then I'll let the bitch run. All right, there's Nasdaq. Uh, if you're not in the trade, you could enter it now. I mean, if you're not in, you could enter it now, and this would be your stop loss. It's not the worst stop loss in the world. I mean, you're 2.3. You know, it's not the best RR. You know, maybe you could do a little tighter on the stop loss here because you don't want to come back down and break that 88, right? So if you do something like this just below the 88, then you're at, you know, 3.63 to 1. So that's not the worst, okay? But yeah, I'm already in down here. So we're good. There's Nasdaq, and so we don't have anything else to do until we get in this area up here to look for sales. All right? And maybe we lose this trade, and if we lose this trade, then we'll just look to enter at here the 88.6 to buy it back up. All right, so Nasdaq is just there. We've already done it. We do have it again an A and a B on 30, but we're already in the trade on Nasdaq. And the same thing for gold, guys. I mean, look at this. It's already marked up. You can see it. We told you guys. Here's our Fibonacci. Again, we started at the top because we knew where the top is. We started at the top and we drug it down until we had a good feeling about it, right? Look at this area. Look at this area. This is bounced off the 61.8, 61.8, right? This bounced off the 78.6. So, I mean, this is where I put my Fibonacci. That's where I put it right there. Now, maybe you could say, okay, well, maybe we should go from this one right here, you know, but I did it. I went from there. This is just one of those things like I don't know how to explain it better than that. You guys, it's like a trial and error. You got to play with where you want to put your Fibonacci's, but the best suggestion I could give you is just drag it until it looks the best. Drag it until these marks over here line up with your best structure. This 50% has a good rejection right through here. It has some resistance right here. This 61.8 has support, right? It has support all through here. So you know that this Fibonacci is in pretty good spot. It might not be perfect, but that's pretty damn good, right? Maybe we should move it up to this low. You know, it's you I don't want to say it's an exact science because sometimes it can be an exact science, but then a lot of times like this where there's not a clear over here like where is the bottom, this one or this one or this one, this is where you've got to move that Fibonacci back and forth for it to line up the best. So maybe this is the correct bottom and it rejected the 88.6, not the 78.6, okay? Because that kind of makes sense. There's a good double bottom. Look at this 61.8 rejection, 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 rejection. Actually, this is probably a better fib. All right. You just saw me change it live. Yeah, that's a better fit because look at the 38.2 at the support resistance. Oh, yeah, this is where it needs to be. Look at this 236. You see how this 236 is acting as resistance? Look how this whole area right through here on the 61.8 is acting as support. And actually, if you drag this over, look how it's acting as resistance right here. Okay. And then look at how this 78.6 is acting as resistance, support, resistance, excuse me, support here, support there. All right. And it just bounced off the 88.6 after it scooped up this liquidity. See, it broke that liquidity right there, hit that 88.6 and bounce. So we're good to go. So now I'm going to try to at least keep this trade into the 236. So that's going to be my TP on this. I got in down here. My 236 is going to be my TP, which is also this resistance area. And so I know people like to trade gold zone to zone. You know, and if I put this out on the Telegram today, if you're playing gold zone to zone, that's good to go. When it breaks this 61.8, add another entry. All right. Put your buys. You know, I don't trade this way. I don't trade this way. But you could put another entry there and there could be your TP. All right. You know, on a buy stop. And I don't even know where the hell you'd put your sell stop. I mean your stop loss. But if that breaks that one and you throw in another entry and there's your TP. All right. And when it breaks, you throw in another one, right? And there's your TP. Okay. Again, as you get higher up, this one over there, that's obviously more risky. But if you're a gold to gold, a gold zone to zone trader, which a lot of people are, when it breaks this zone, target this one, and then target this one, and then target this one, and then leave runners. Okay. That is the beauty of the Fibonacci, especially when you get it dialed in, like right here, like we have it. Then you could play the zone to zone stuff for all those people out there who love to do that. Me personally, I don't. I just want to catch the bottom and try to ride that bitch all the way to the top. All right. That's just me. Um, Okay, so what else are we going to do real quick? Let's look at the dot card. Guys, here's my dot card. YouTube, Twitters, Instagram, my flash funding. If you guys need a funded account, click this link right here. Go get yourself a funded account. I'm giving away an account tomorrow. So when you click on this account, no, actually, if you win tomorrow, just hit me up on social media. Tell me your name and your email, and I'll give you I'll get you the account. Here's the link to my flash funding Discord. Pip Connect. Shout out to Andy Peters, my boy. He this is his group. It's a paid Discord. Just the Discord I've been in the longest. This is the Bored Ape Salon Club. Guys, go buy a Bored Ape and get in this group. It's ridiculously good. I'm about to show you right now. Market Bandits is a free Discord. And this link here for Badass Trade Talk is right now inactive. I think my boy Stefano is not wanting new people to come on. It is what it is. Let's look at the Bored Apes real quick, guys. Don't look at that stupid ass message. Bored Apes. This is their Discord. And just look at how crazy this is. All right. Look at how crazy. There's so much announcements and holders and new holders, official links and roadmaps, and so much stuff when it comes to A, crypto, and B, just NFTs in general. There's so much information in here. And on top of that, you have my own section where I show all my own charts and I put everything in here. So if you guys ever need anything from me, you can add a board, you can go buy a Bored Ape, you get access to their Discord, and you have access to all this stuff. You have access to me, you have access to a bunch of guys who are really great. This is the Market Bandits again. This is a free Discord. This is Nick G. Come in here, talk about gold, indices, and Forex, the trading chat. Come in here and sauce it up, whatever, right? Whatever you guys want. Okay, that's what that is. And there's my dot card. And I think we might even have some news on Friday. So tomorrow is Thursday. I don't believe there's any red folders tomorrow on Thursday. Let's look. Thursday, I am wrong. We have jobless claims, jobless claims, jobless claims. So we have the jobs coming out, which we kind of already know what they are because the Fed chair talked about that today. So unemployment still remains kind of low. It's not up to like 3 or 4%. So we know where the job numbers kind of already are because of he leaked it out today. And then the unemployment, same thing. It's below 4. So I mean those kind of go hand in hand. NFP though is this Friday. You can see some more volatility coming in on Friday. I'm not sure what we're going to see as far as volatility is concerned tomorrow because we had a lot today and we have Friday coming up with the NFP. So just be cognizant of that. This is probably, again, the idea is Monday, Tuesday, the market continues. Wednesday, you find a turnaround. Thursday, Friday, it goes in the opposite direction, which because usually the weekly candles aren't big. There's a lot of dojis, there's a lot of small body candles on the weekly, and that means because of the week likes to kind of they kind of likes to balance out, you know. All right, guys, that is the video for tonight. Thank you guys very much for stopping by. Please do me a favor, smash that thumbs up button, hit that subscribe button. If you have any questions, please let me know. I appreciate you guys. Remember, I don't sell any subscriptions. I don't have any paid courses. I have none of that. Only thing I ask is you just smash that subscribe button and help me grow this channel. I will see you guys en la mañana and we'll give away that count base.